How's it going, YouTube? Welcome back to another day in the House Money Investing channel. In tonight's video, we're just going to go over some gains I got in today, mostly just from crypto and some stock news, maybe some stock picks, and some inspirational quotes related to dividend investing. So we'll start off here with my Webull account. As you can see, I have a little bit over $1,300, and I'm up $287.76. That is 26.13%, which is almost 3 times the average, which the average is about 10%. So I'm doing pretty well. Then my top gainer, as you can see in my account, is Spotify. I got 1 share at $261. It's worth $335 now. So I'm up $74.10, and that'll be 28.35%. So Spotify has done pretty well for me. Sorry, I'm in West Palm Beach. I'm watching these racers. They're out there acting a fool. Then we got my Robinhood account here. I got a little bit over $4,400 in the Robinhood account. As you can see, it's up $902.89 over the past year, which is really 6 months. Started this in June. Both these accounts that I just showed, it's up 25.32%. So it's doing very well as well. As you can see here from my graph, how it kind of went up, off the jump, and then it took a big dip down, which I never got, down to zero, of course. But I just rolled it out, kept investing. Buying the dips, stuff like that, and let it compound. As you can see, it's just been going up since. So I always try not to panic sell and just ride the wave. This here is my Litecoin. My average cost is around 51 bucks. I got almost 2 coins. It's valued at $213. It's 5% of my portfolio. And as you can see, my total return is $116 and some change, and I'm up over 120%. So Litecoin has done very well for me as well. Then here we got Ethereum. I got almost 30% of a coin. Average cost is $355. It's valued at $191. It's 4% of my portfolio. I'm up over $88. Or 85% in Ethereum. So Ethereum has been doing very well for me as well. Then here, Oracle, they're actually moving their headquarters from California, which is in like the Bay Area where all the tech stuff's at. They're moving it basically to Texas, to save money on taxes and all other kinds of stuff, which would give them a lower overhead and more profitable returns on all their stuff they got going on. So Oracle is just something I posted and something I added to my watch list. I have swing traded Oracle before, and I believe I might own some shares of Oracle. I'm not too sure. I have like 10 brokerages, so it's kind of hard to keep track of all the positions I have. But it's definitely something I want to stack up in, so I'm going to try to swing trade that and hopefully accumulate some fractional shares of Oracle. Then here, I just posted, this is related to dividends, how to get started investing in dividends. Number 1, identify 10 great dividend stocks, then start tracking these stocks. Open you a brokerage account with a reputable broker. Dollar cost average into dividend stocks. Small dollar amounts on a regular basis. Schedule is the best. Tighten up your budget, like your personal budget, free up more money to invest. Also build an emergency fund. That way if something goes wrong or something happens in your life, you don't have to sell your dividend portfolio. And then let's see what else we got here. Look forward to realistic mini goals. Invest $100, $500, and jump to $1,000. Get your set your goals at, like, say I want to make $50 dividends, then do it to 100, then do it to 200. Steady go up, stuff like that. And then change your life in 3 steps. Slowly accumulate high quality dividend stocks, dollar cost average. For example, Johnson & Johnson, PepsiCo. And enjoy your passive income. Do nothing and collect growing streams of passive income, dividend checks. Sidestep the system that is holding you back, both financially and, more important, mentally. Then I just posted a list of 40 plus dividend stocks that people can look into. These are great dividend stocks. You got, companies like Air Products and Chemicals, Colgate, Kimberly-Clark, Clorox, Campbell Soup, General Mills, Pepsi, Coca-Cola, BP, Chevron, Shell, Bank of Hawaii, Bank of Montreal. You got Abbey, Johnson & Johnson, Pfizer, 3M, Caterpillar. You got some retail here, Realty Income. You got McDonald's, Starbucks, Home Depot, Walmart, Altria Group, Philip Morris, Apple, IBM, Duke Energy, Southern Company, Honeywell, PPL Corporation, Raytheon, Wells Fargo, just to name a few. And then, if you wish you were an entrepreneur, dividend stocks allow anybody to be an entrepreneur anytime in your life. Build a portfolio of dividends is similar to starting a small business. Shareholders become business owners of the best kind, and it's truly passive income. And dividend stocks isn't all about the money. It's about coming your own boss, creating something of your own, being excited about something in life, give you hope and stuff like that, and something to believe in yourself, and breaking out of the regular work system. And it's all about the journey. And then dividend stock investors, they have it right. They make the money, and it's also freedom. Eventually you'll get financial freedom or FIRE. If you're already older, you can still build financial freedom through dividends. Dividend stocks is basically like your second chance. Like if your life isn't going the way you planned it to go, or even if it is, dividend stocks free up your time and stuff like that. Like I said, it's basically like starting your own business. You can watch your progress right in front of your eyes. You got full control of it. It brings purpose back to your life. You can pursue your real passions. It also helps with your mindset. The best dividend stocks to have are high margin gross, operating and net. You want to look for great brands, company with low debts, regional long-term dividend growth, 6 to 7% per year. Starting dividend yields should be around 2 to 4%. The companies with the higher ones usually are the companies that are losing money hand over fist. So, you'll get dividends, but your stock's going to go to nothing or close to it. Payout ratios should be around 50%, no more than 60%. You want to look for pandemic and recession-proof business models, top line and bottom line growth over long term. You want to invest in the companies that you can understand, something that you can analyze, and you want to look for strong cash flows. Then I'll post an example of Campbell Soup. You can see their forward PE, the dividend yield, the payout ratio, and that's just an example here, of a company that you can invest in, which all the ones that I posted a while ago will be, qualifiers for that. Then here we have my Robinhood again. At this point, it's up $923, so it's steady growing. Then we got my cryptocurrencies in my Robinhood. Bitcoin's up 126, Ethereum's up 90, Bitcoin Cash is up 7, Litecoin's up 126, Dogecoin's up 27, Ethereum Classic is up 6. This is my Bitcoin and my Cash App. It's valued at a little over $1,300. This is a $327 investment, and I've just been putting in a little bit at a time into Bitcoin and my Cash App since March. So basically $327. I'm up $980 in profit in just some months. Then this is the Bitcoin in my eToro account. I bought $47 worth a few months ago, and it's already doubled in profit from my Bitcoin here in eToro. It's worth a little over $48. Then we posted the Robinhood again. Now it's up to $9.29. Crypto's steady going up. Bitcoin's up to $125. Litecoin is up to $132. Ethereum is up to $89. Then I posted two dividend companies that are on sale right now, which is Chevron and Valero. They've been really beaten down. We all know renewable energy, EVs and stuff like that are taking over. These companies are going to have to be very innovative and get their stuff together. But it's going to be a while. The oil business is still, intact. And these are two good dividend payers that that are beaten down, that are cheap right now. They're on sale, so these are two that I would suggest to look into. That'll be it. I'm going to go ahead and purchase about 6 shares or 6 fractional shares. Probably about $221 worth of shares. I'm going to divide that into 6 different companies on my M1 Finance portfolio. So I'll drop that video here in a minute. If you like this video, hit the thumbs up. Leave a comment if you would like. You can subscribe, hit the bell if you want to follow my journey. My investing strategy for the House Money Challenge is deploying money into the market, waiting a certain amount of days, withdrawing my principal out, leaving all of my gains in the market. I started this back in June. I've accumulated over $12,000 worth of free stocks, free shares, free fractional shares, which is house money. You don't have to use the same strategy. If you would like to try it, you can. You can do it with less money, more money. If not, if you don't like the strategy, that's cool. You can always look over my tickers that I'll post, and the companies that I'm into. Do your own due diligence, and see if that's something you want to look into. And you can also watch my gains and watch how my portfolios are doing over time as well. So that'll be it, guys.